Do you have plans to go to Blue Mountain, Wasaga Beach, Niagara Falls, or even Ottawa? Why not do it at a discount? But how, you ask? Simple, with a staycation. The people of Ontario can get a tax credit up to 20% of what they spent on a staycation. What's a staycation, you ask? A staycation is a holiday that you take either at home or near your home rather than traveling to another place. So pretty much in Ontario, you can take a staycation. So Ontario residents can claim up to 20% of their eligible 2022 accommodation expense. For example, if you stay at a hotel, cottage, or campground, when you're filling out your tax return for 2022, you can claim eligible expenses for up to $1,000 for individuals and $2,000 as families. So if you plan to spend $2,000 on a vacation, you will get a tax credit up to $400 as a family. If you decide to go alone, you can spend up to $1,000 and you'll get back a $200 tax credit. Keep in mind, this is for accommodations only, so not your food expense, your gas that you use to get there, but just the accommodation. Who can claim this credit? Well, that's a great question. You can claim this credit if you are an Ontario resident on December 31st, 2022. Only one individual per family can claim this for the year. You can claim a leisure expense for a stay that's less than a month in Ontario at a short-term or camping ground accommodation. So things that would qualify are a hotel, motel, holiday inn, say what? Or resort, a lodge, an Airbnb that charges HST, a bed and breakfast, cottage, or campground. Short-term accommodations would generally not include a timeshare agreement, a stay on a boat, train, or a vehicle that is self-propelled. So like a RV home or whatever. The tax credit only applies to leisure stays between January 1st, 2022 and December 31st, 2022, regardless of the timing of the payment for the stays. The tax credit does not apply to business travel. So nice try, but no, doesn't work. Accommodation expenses must include the following in order for you to claim it. So it has been paid by you or your spouse, common law partner, or your eligible child, as set on the detailed receipt. You must be charged HST. If HST is not charged, you will not be able to claim this. You have not been reimbursed by your spouse, common law partner, or your eligible child, or by any person, including your friends or an employer. As long as you meet these conditions, you can claim the following expense. Accommodations for a single trip or multiple trips, up to a maximum of $1,000 for individuals and $2,000 as a family. Accommodations booked either directly with the accommodation provider or through an online accommodation platform. The portion of the expense that is necessary to have access to the accommodation, and the accommodation portion of your tour package expense. So just a note, this is a credit on your tax return. So that doesn't mean that you're going to get back $400 back. It is a credit that will reduce your taxable income. How to claim this credit? Great question. You must keep detailed receipts for any eligible expenses that you incurred. Those receipts must include at least the following information: the location of your accommodation, the amount of money that you paid for the stay, and it has to be within reason, the GST or HST that you paid, the date of your stay, and the name of the payer. You can claim the credit on your personal income tax benefit for 2022. The Ontario Staycation tax credit is a refundable personal income tax credit. This means that if you are eligible, you will get a tax credit regardless of whether you owe income tax for 2022. Remember, this is a temporary tax credit, so it's only for 2022. Make sure you take advantage of it. Click the link in the description to get a free guide for a staycation to help you maximize getting that tax credit.